Forex Fanatics. This is Jordan here at Pure Elliott Wave. I wanted to do a free analysis for you today on the US dollar, Japanese yen. And I really liked doing this because it was exceptionally clear on the quarterly, all the way down to the daily, and the technical charts, what we're looking at moving forward. If you like what you see here today, consider subscribing to our full Euro-Dollar service, which includes 5 updates a week in the evening, and then a video every Friday where we follow the biggest currency pair in the world, the Euro-Dollar. We've had some awesome calls so far, and we're expecting some more movements very shortly. But let's get into the Japanese yen. Overall, for the bigger picture, we're expecting downward movement. That's the main, and the alternate are expecting downward movement. And the target for the main is at 83, and the target for the alternate is much more severe. And I've had a few targets come up around this 9 area. I also got a target at 15. For the short term, on the daily and the weekly, we're expecting the recent bounce to continue upwards, and then the bear market to continue back downwards. The technicals heavily support the top in October 22, and further bear movement overall is expected. So, with that being said, let's get on into the quarterly chart here. Here we have the entire price history for the US dollar, Japanese yen. You can see we have a very clean impulse to the downside with this option. My alternate is also at the quarterly level, and both are expecting the downward movement. So this option sees super cycle 1 complete as a 1, 2, 3, 4, 5 impulse, and then the third wave is extended as 1, 2, 3, 4, 5, containing the third of the third here, which is the steepest and sharpest movement in the structure. So it fits very well. Wave 4 at cycle degree, also a contracting triangle here. Since the bottom in October 2011, we've had a zigzag structure which subdivides very cleanly as an ABC zigzag. However, this structure only retraced 27% of the entire impulse to the downside. And usually for wave 2 positions, we're going into supercycle wave 2 after supercycle 1. These retrace around 50 to 60%. So we're expecting more corrective action upwards. However, the first structure we have here is a clean zigzag. So we have to think to ourselves, what structures in a wave 2 position have the A wave as a zigzag? Because we don't believe this zigzag is the entire correction. So we have 2 options. The first most common option is a flat, which is pictured here, which the B wave in a flat usually retraces a minimum of 90% of wave A, which gives us our target to the downside of 83.245. The next option would be a combination, which would be a WXY, and the X wave would still need a downward movement. X waves usually retrace 60 to 80% of the W wave in a double or triple combination or zigzag. So either way, we're looking at downward momentum, and the most common is going to be the flat, which we have pictured here. Now let's move on to the alternate count. On the quarterly alternate chart here, you can see the price beginning in 1971, also coming down as an impulse. However, this option sees supercycle 1 not yet complete. Cycle wave 3 within supercycle 1 is extending at 1 more degree, so we could see the wave 3 here we have as a 1, 2, 1, 2, with the third wave still the same. However, we have a 3, 4, 3, 4 at primary degree coming down into 3, and then we see cycle wave 4 likely complete at this top here. And there's a lot of technical significance to this top, which you'll see moving forward. So this count sees cycle wave 5 underway already. We'll be subdividing as a motive structure, and a target for that is for 5 to reach the very common 618 ratio of cycle 3 at 9.0019. And I also have another target in that area to add some confidence there. The extension of 1 in relation to 5 also gave me a target around the 15 area. So seeing much lower prices, and it's very bearish count. Invalidation for this count sits above, where 4 cannot enter the price territory of 1 above 254.540. The rest of our charts are going to be using this primary count here, and the reason for that is the alternate does not hold well to trend channels. This structure holds much better to the trend channels, and we believe this ABC structure or WXY structure is much more likely. So on the monthly chart, we're going to take off from the end of cycle wave 4 here, and we'll take a look at this area in much more detail. This is the monthly Elliott wave chart here. You can see I really love charting this because it just counted so easily. We had a really clean impulse to the downside with the 3 of a 3 right here at potentially the steepest part of this movement. You can see our 3 of 3 for primary A, also the steepest part, and our 3 of 3 for primary C within cycle A is the steepest part here. So it worked out really well. Our B wave within primary A for the A, B, C zigzag, subdividing as a 5, 3, 5 structure, is really cleanly a contracting triangle, which is the most common type of triangle in Elliott wave theory. We've drawn a Elliott channel around this structure where you start at the beginning of primary A, draw a line to the end of B, and then place a parallel copy on the end of A, and C usually finds resistance along this channel, which it did here. Had almost like a false breakout where it just barely popped out and then quickly went back down. So that's reassuring to see. Also, technically speaking, we have a ginormous bearish engulfing, which this candle's probably over 2 times the length of the body of the topping green candle here. So this is a really strong bearish engulfing pattern. You can see we broke through all of that resistance in the recent past, made this new high, and had this ginormous bearish engulfing. And because it's on the monthly level, that adds much more significance. Every time you go up in time frame and you're seeing these patterns, the higher the time frame, the more significant the pattern. So it's a high probability that this was actually the top for cycle A, and now we're going down into cycle B, which commonly subdivides as a zigzag. So we're going to be labeling this A, B, C, subdividing as a motive structure for A, which will consist of 5 waves down. The invalidation for this count sits just above at 152.942, so not too far off to the upside. On the weekly chart, we'll take a look starting at the end of primary B, looking at this structure here. Here we have the weekly chart, the end of primary B, going up into primary C, completing cycle A, and from there we're going down into cycle B. Within cycle B, it's going to subdivide as an A, B, C, and we have the first primary A wave subdividing as an impulse right now, very cleanly in fact, for intermediate 1, and then we're going into intermediate 2 right now. This structure as a zigzag, very common for wave 2 position, also common to be sharp like this, is unfinished, which I'll show you on the daily chart, and we have a little bit more room for upward movement. Our target for that is 1.618 times the length of minor A, and that would be at 146.934. So close to the top of that Elliott channel, and the technicals do agree with that, showing there's a little bit more room for some upward momentum before we resume the larger bear market downwards. On the daily chart, we'll take off from the bottom here of intermediate 1 and look at this structure here in a little bit more detail. The bottom of intermediate 1 here, going up, minor A, minor B, minor C for intermediate 2, and you can see minor C is incomplete, only being comprised of minute 1, 2, 3 complete, and then we're still looking for a 4 and a 5. So a little bit more of a pullback potentially, and one more wave upwards. You can see I really like this chart here because it just subdivides so cleanly. We have the third of a third here, the third of a third here, and this just counted so easily for me. 1 2 1 2 1 2, and then we had our 3 4 3 4 3 4 coming up into A. So I really like this currency pair. It seems to behave really well. You'll see on the technicals behave well as well. So we'll get into that in just a moment. The invalidation for this count is where the fourth wave enters the price territory of the first wave at minute level. If you see price below 135.129, then you'll know this Elliott wave count is invalidated for more upwards momentum, and this upward move is likely over. You could also have further confidence if price breaks below this Elliott wave channel for the short term, which has potentially 2 to 3 tests along it so far. The upward target remains the same. Now let's get into the technical analysis. We'll be going through the monthly, the weekly, and the daily technicals. This is the monthly chart for the volume data. We keep our volume data and our other indicators separate because stock charts doesn't give us volume data for this currency pair. So this is the volume data on the monthly. You can see with this ginormous bull move, we had increasing volume towards the top, then we topped out, and since that top, we actually had even more volume on the downward moves, which is a sign of strength on the bear side. And then with the pullback, which started here, we've been pulling back and volume has decreased with the bull movement. So that is a sign of a potential bear market from a volume profile perspective. Also see money flow reached overbought, supporting that top, and then unbalanced volume had a breakdown from this kind of long held range. However, it's a little weak with the steepness of the slope here. And since then, we are trying to form a new range with unbalanced volume. These are the other monthly technicals. You could see we had that very strong bearish engulfing at the monthly level, which I mentioned previously. We also had a morning star at the bottom, which led to this bounce that we've had. The ADX is showing no clear trend at this time, reversing from a very extreme bull trend where ADX reached over 45 and was above both DX lines. The moving averages are overall bullish at this level. We've got the 1 year and the 2 year both sloping upwards. We're sitting squarely between long-term resistance above at 152 and support below at 124. RSI reached overbought at the top here and is currently sitting at neutral. Stochastics are neutral. ATR had a ginormous increase with this spike upwards, and there's no reliable correlation between the dollar index and the US dollar Japanese yen. Similarly, there's no reliable correlation with the euro dollar and the US dollar Japanese yen. Our model now, since ADX is showing no clear trend, we're going to rely on stochastics and support and resistance, expecting swings from support to resistance, and stochastics swinging from overbought to oversold. Since stochastics were overbought, now we're expecting stochastics to swing to support and reach oversold. So support sits down here. Stochastics have further to go, however price may not move in a straight line between the two. Technicals are indicating potential more downside to come in the next few months. This is a weekly volume data. You can see a similar story where we had a large increase in volume. Since that top, volume remained flat and decreasing overall with the new bearish candlesticks. So volume profile looks slightly bearish on the weekly chart here. We also had some bearish divergence between money flow and price, where price made a higher low, but money flow made a lower low. So that is bearish and potentially shows us that this move upward may not be sustained for the long term. On balance volume also showing a pretty good range between the top here, which shows 2 tests, and the bottom, which shows maybe about 7 tests. And this line is moderately significant due to the slope and how many tests it's had being held since late 2022. So we could see a potential breakout from this setup coming soon. These are our weekly technicals. No recent candlestick patterns to note here. We did have a bearish upper wick at the top, and we had some bearish divergence where price was making higher highs and RSI was making lower highs, which you could have used that at the time to help you figure out where the top was in this move. The 200-day moving average is overall flat, and we're sitting between that previously mentioned resistance and support. ADX reversed from the very extreme bull trend, has recovered and is now showing another bull trend in its early stages with much more to go. RSI is neutral and has not yet reached overbought with the new bull trend. Stochastics are overbought and ATR is declining with the new bull trend. So to me, this chart is showing there is more room in the new bull trend to move upwards, and there's more room for RSI to go before it reaches overbought. We're not using the stochastics now because ADX is trending, so we could potentially see more upward movement agreeing with the Elliott wave count. However, that upward movement could have less volatility than what we've seen in the past here. Onto the daily charts. You can see we are starting this daily chart at the beginning of 2023, moving to present day, 21st of June. And overall, we've had this upward swing, and volume is actually telling us a different story than the weekly chart. You can see volume is actually increasing subtly with the bullish price movement. We decreased at the beginning. We had a little bit of an increase in volume here that was decreasing as we went down, and ever since then we've had a slow, steady increase with the bullish price movement. So I believe this could indicate a little bit more bullish price movement to go, agreeing with the Elliott wave count. We also had some weak bearish divergence here between this high and this high. This made a slight new high, and money flow made a lower high there. And then we had a larger high in May 2023, and then money flow made a lower high there as well. And currently we're sitting at the same level as we were back then on March 8th. So the volume profile not increasing at a substantial rate, and the weak divergence here tells me that we could see some more upside, just not very far, potentially agreeing with the Elliott wave count. On balance volume, also we broke out of this range and we broke out of this range here, and currently we're forming a new range. If I did draw some lines here, these would be a little steep to be technically significant, so we're going to wait a little bit and see if we can spot a new range moving forward on the daily chart. Last but not least, we have the daily chart here, and these technicals are very important for the short-term movement. We can see an evening star here, and this missing candlestick was actually a red candlestick, which has confirmed this star at the top. Stock charts is just having a glitch, maybe because of the holiday around this time, but we did not have this visible for you. But there is an evening star at the top, which is a bearish reversal pattern. We're currently sitting between support at 137.75 and resistance overhead at 145.20, and the moving averages, 200-day moving average is flat, the 50-day moving average is sloping up below that, and the 13-day moving average is sloping up above the 2. Overall, these moving averages are moderately bullish. The recent trend has reached extreme but not very extreme. Over 45 would be a very extreme bullish trend. And RSI showed some bearish divergence where price made a new high and RSI made a lower high. So that is a bearish signal. Also, RSI is nearing overbought, not yet in that overbought territory. Stochastics are overbought, but we don't use stochastics when ADX is trending. ATR overall is declining, showing volatility could be limited to the upside. This chart to me agrees with the Elliott wave count, showing that we are approaching a top, with RSI showing the divergence and ADX showing an extreme trend, and also the chart pattern. However, there could be a little bit more to go, symbolized by RSI not yet reaching overbought or being able to reach further into the overbought territory, and ADX not yet very extreme. So I think this correlates well with the daily Elliott wave count, showing a little bit more upward price movement expected. So overall, we have a very clear picture of what is going to be potentially happening in the next few weeks for the US dollar, Japanese yen. That's all from me. This has been Jordan Marshall at Pure Elliott Wave. Thank you.